In this video, we will analyze the trend change in Xcn coin. This trend change is very important for Xcn coin. Please watch until the end to understand and not miss anything. As I showed in the previous video, there was a downtrend that the price has been moving in for a long time, and this trend has finally been broken. Such downtrend breakouts are one of the important technical signals that the momentum shift has started and sellers are losing their strength. The price confirmed this breakout by making a small retest after breaking the downtrend to the upside. A retest is usually a confidence booster for traders, as it shows that a bullish move will be healthier if the price tests the breakout as a support and reacts upwards from there. Breakouts without a retest can sometimes be fake breakouts, and the price can go back to the old trend. But here, the price seems to have confirmed the new support level by retesting after breaking the downtrend. And we can't understand everything just by looking at the trend, so we need to examine other metrics as well. Stay tuned. There's a strong bullish order block just below the price, and this area could work as an important support level. Since this order block is a heavily traded area by buyers, there is a high probability of a strong reaction when the price comes here. Large investors and institutional buyers in particular prefer to trade in such order blocks, as areas of high liquidity provide a favorable backdrop for the price to rebound upwards. More importantly, this bullish order block coincides exactly with the retest point of the broken downtrend. This is extremely important for technical analysis because retests after trend breaks can often be the start of a new bullish wave. If the price tests both the broken trend line and the strong order block as support and buyers step in, the probability that the price will move up again will increase considerably. And the fewer contacts in an order block, the stronger it is. There's an important bearish order block to watch out for on the upper side, and the price last rallied up to this area and left a wick, followed by a sharp retracement from here. The fact that the price rallied up to this area and left a wick suggests that sellers stepped in at this level and pulled the price down. This is a sign that buyers are not strong enough for the moment or sellers are still dominant. Especially when the wick is long, it makes it clearer how strong the selling pressure is. If the price makes a move towards this level again, it will be important whether this zone can be broken. The more it touches and weakens it, the easier it will break there. According to the Elliott wave theory, the price is currently in the third wave, which is usually known as the strongest and most voluminous bullish wave. The third wave is characterized by reaching the 1/618 Fibonacci extension level, which is exactly the critical point at the moment. This level is usually considered the natural target of the third wave, and there is a high probability that some profit realization will occur here. However, if the price breaks this 1/618 Fibonacci level strongly, the probability of the uptrend continuation will increase considerably. If the buyers manage to break through this level, the green line and then the blue line will be the next important resistance area to target. And also, as I always say, the third wave comes all of a sudden and nobody knows what it is. And that's exactly what happened. It came all of a sudden and everybody was surprised. The head and shoulders reversal pattern that I've been focusing on for the last two videos has finally broken out and hit the target we set in our technical analysis. This pattern is known as a classic trend reversal pattern and is usually seen at the end of downtrends, heralding a bullish breakout. The completion of this pattern was an important technical development, indicating that buyers were gaining strength and selling pressure was weakening. The breakout of the pattern occurred after the upside crossing of the neckline we had previously identified. After the breakout, the price rallied rapidly on a bullish move, and we had technically set a target at the depth of the head. As expected, the price rallied up to the target level calculated by this metric and reached the pinpointed point with pinpoint accuracy. And looking at a single metric is so bad on the chart, so we have to look at a few things. As I mentioned in previous videos, we have already drawn the ascending channel structure that the price is moving through, and we have closely followed how this channel is guiding the price movements. Now, when we examine the same ascending channel structure again, we see that the price made a strong rise towards the upper band of the channel and broke through it to the upper band. This breakout can be considered as an important sign that the uptrend is still continuing. However, the price is now in a retest phase, pulling back to the upper band of the channel. In technical analysis, retests after breaking the upper band of such a channel can often be an important confirmation signal for the healthy continuation of the uptrend. And if the retest is successful, the price will continue to rise. Looking at the Bollinger Bands analysis, we see that price has now reached the upper band and is getting a reaction here. Bollinger Bands are an important volatility indicator used to understand whether price is in overbought or oversold zones. Usually when price reaches the upper band, this area can act as a resistance, and it is possible to encounter some selling pressure here. In the current movements, the fact that the price has moved up to the upper band suggests that there is strong momentum in the market. However, for a healthy uptrend to continue, the price needs to make a correction towards the Bollinger mid-band. The middle band usually represents the average level of the price's movement, and a strong support area may form here. After reaching the middle band, the price may regain its strength and move back up to the upper band for another attack. Looking at the MACD indicator, we can see that currently the MACD line is in a peak position, and the market is gaining momentum and completing a certain bullish process. Usually when the MACD line reaches such top levels, if a bearish crossover occurs, this indicates that the market is losing some strength, and the possibility of a short-term correction is increasing. If the MACD crosses the signal line to the downside, this can be taken as a signal that selling pressure may increase, and the price is likely to make a retracement towards the bullish order block. Since the bullish order block is an important zone, where previous strong buyers come into play and the price can find support, a pullback to this level can be seen as a natural correction process. Looking at the RSI indicator, it is currently forming an ascending trend line and continuing its upward movement without breaking below this trend. The RSI is an important indicator that is often used to determine price momentum and overbought-oversold zones. For now, the RSI touching this rising trend line indicates that it has reached an important support zone. If the RSI reacts upwards after touching this trend line, this indicates that the price may continue its upward movement. This is because in technical analysis, when the RSI stays above the rising trend line, it's a sign that buyers are still strong in the market and the trend may continue. However, if the RSI breaks this rising trend line to the downside, then we can consider that the market is weakening in the short term, and selling pressure may increase. If the RSI breaks below the trend line, the price will probably pull back a bit, but I don't think this will happen because we have broken the downtrend. Looking at the Vortex indicator, we can see that the blue line is currently positioned above the red line, indicating a continuation of the uptrend. At the moment, the blue line is on the upper side, indicating that the market is dominated by buyers and the uptrend remains dominant. This kind of scenario is usually considered a positive signal that the price is maintaining its upward momentum and the trend is still strong. However, if the blue line starts to approach the red line, or the red line moves upwards and crosses above the blue line, this could signal that selling pressure is increasing and the downtrend is getting stronger. At the moment, there is no such signal, and the bullish trend is still dominant. At this point, it will be important how strongly the blue line stays above it and how the red line moves. And if the blue line moves higher from here, the price will move higher. And the price has finally risen above 200 EMA, but it hasn't retested yet. When it gets close to the 200 EMA price, it will definitely touch it and continue its uptrend again. And since the price is above the 200 EMA, this could be a long-term uptrend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.